Welcome again to another educational series videos that I've been doing. Last week I talked about how to use price labels and prior price points as your support and resistances. And today I'm going to move on to talk about moving averages, SMA more specifically. And I think in the next part of this video, part 3 of the video, I will talk more about day trading and also using exponential moving average. Now, last week, just to recap real quick, what we did is we used prior resistances or support and started drawing some support lines into for your swing trades. All right. And here, if we were to do the same, I'm using the Fubo daily chart. I am, right? Yes, Fubo daily chart. For the stretching out for the last 5-6 months here, we can easily see using these simple price labels, we can draw support and resistances. And so when you enter into or exit from a position, you use these price labels as supports and resistances, which is a great way. And now what we want to do is I'm going to show you how to time your entries even better in terms of using the moving averages. All right, so what is a moving average? A moving average is simply if you set a value of 8, it'll take the last 8 candles or last 8 closing prices and divide it by 8. So you have what we call simple moving average. It is displayed on any chart using any stock charts that you use in terms of lines that moves along with the prices. So we're going to talk more today using MA8 and also MA21. Now, the way that I use moving averages when I'm doing swing trading is what I like to do is I like to see how the lines are reacting to the price, number one. Number two, I'm also going to use moving averages as my support and resistances, and also time my entries better. Just because a particular stock has some type of momentum, it's not always wise to enter the position unless I see a break resistance and I want to see the moving averages actually curling up. So, for example, if we're looking at Fubo back in late May, early June, a great entry is to see when the moving averages, all right, are curling in an upward motion like here, okay? Once you see that, you can actually see very clear momentum into the price, because what happens when a price moves up above any average lines, it usually sets off scanners and screeners that traders use. All right, and that's when people actually jump into the stock. So you don't want to play with stocks that are not in play. You want to stick with stocks that are in play. You see volume coming in. That's also a good indicator. And you want to see the moving averages curling up. Now, if I were to enter this particular trade along this area, I'd actually do okay. However, this moving average, or at least this price action, was very short-lived, and we see that it starts dipping down. And what happens when when a stock price moves below a moving average line, that moving average also becomes its resistance. What used to be support is now resistance. Okay, so if you got into the swing trade, you would say to yourself, okay, I'm looking at these moving average lines, it's going up, that's good, but once it starts trending downward, that is absolutely an indicator for you to exit the position. It doesn't mean just because you're swinging it, it's a long-term hold, etc., whatever you want to call it, you don't want to lose out on profit. Now, what you could do is move up your stop loss just to prevent, further decay or value of your portfolio. All right. So with that being said, let's go ahead and keep going along with these moving average lines. So I'm specifically looking at the blue MA8, the blue line, and we can see that these are it's trending up here, but it was very weak and it continues to trend downwards. Okay, so this is not necessarily something that you can actually play because, well, the price is actually moving downwards using the moving averages. It's actually going to break all level supports that you can possibly draw in this scenario. All right. I want to introduce to you also something we call a death cross. A death cross is when MA8 and 21 converges or crosses each other, but in a downward motion. When you see that, that generally means you need to get out of the trade, because we can see a death cross happening here right around June 19th or 20th, and it continues to trend downwards, okay? But I also want to introduce to you what I call a golden cross, or what we call golden cross. Here, you have MA8 and 21 converge in an upward motion. This usually signifies a very, very good price momentum or bullish momentum here. And we can see with Fubo, it is literally all the way up here at this point over the $24 range as we speak. All right, so look how the MA8 and 21 rides along with it. If you were to get into this trade, besides using potentially $20.35 as your stop loss, you can actually use 1919 or the MA8 as your potential support. Now, I would definitely not use 1612 as another support or 1143 on the MA100 because you'd be losing out on a lot of profit. But as long as you see the moving averages trending up, and not necessarily coiling or curling downward motion, you're still relatively safe within the position. Now, you could say to yourself, since you grabbed a lot of profit, obviously you want to lock in some profits at this point if you got into the trade around the $13 range here in the beginning of this huge move up. All right, so with that being said, I hope you guys enjoyed this video. If you have any questions, please feel free to hit me on Twitter.